Have you ever wondered why Cardano's 𝗕𝗓 suddenly landed a spot in the US Digital Asset Reserve? Well, let's uncover the surprising twist behind it all. Today we're going to be diving deep into Cardano's journeys, right? Its ups, its downs, and what makes it stand out in the wild world of crypto. So stick around because by the end of this video, you might just see digital currencies in a whole new light. So let's start at the beginning. Picture a young, ambitious project launched back in 2017, born from an ICO that promised to change how smart contracts worked. Now that project is Cardano and its native token 𝗕𝗓. Now it has kind of been a roller coaster of a ride ever since, right? Unlike some other crypto projects that rely on hype and buzz, Cardano was built with a kind of research-first approach. It's like the kid in class who's always doing their homework before kind of speaking up, right? Meticulously planned, detailed, and ready to kind of prove its worth. Fast forward to March 2nd, when President Donald Trump casually mentioned 𝗕𝗓 as one of the cryptocurrencies that could join the US Strategic Crypto Reserve. Well, just a few days later, an executive order on March 6th confirmed that altcoins, including 𝗕𝗓, would be managed under the umbrella of the US digital asset stockpile. Now, that announcement, it kind of sent shockwaves through the crypto community. Right? Many were stunned, some even skeptical, asking why would a government-backed portfolio kind of include a token like 𝗕𝗓, right? It's a ghost chain after all, if you believe all the FUD, right? The FUD. Now, the answer actually lies in the fundamentals. Cardano, it isn't just any kind of blockchain, right? It was designed from the ground up to be robust, secure, and truly decentralized. Now, instead of kind of following the usual roadmap that many crypto projects take, Cardano uses a delegated proof-of-stake mechanism paired with an extended UTXO accounting model. Now, in simple terms, it's built to work differently, right? Ensuring that transactions are secure and that its native token isn't just a kind of piece of digital art, but a functional part of a much bigger ecosystem. Now, one of the standout features of Cardano is its commitment to decentralized governance. Just imagine having a say in how your favorite community runs things, right? Not just voting on small matters, but deciding on big changes like network upgrades and even how funds are used. Well, that's what Cardano offers through Project Catalyst, one of the largest decentralized funding initiatives in the crypto space. Now here, transaction fees and inflation-generated funds aren't swallowed by a central authority. Instead, they're distributed back to the community through democratic votes. It's kind of like a town hall meeting where everyone's voice matters. But here's where things get tricky. Right, while the idea of decentralized, community-led projects sound promising, the real-world numbers tell a different story. Now, despite being one of the oldest smart contract platforms, Cardano's day-to-day activity has been relatively low. Now, according to some recent data, the blockchain processes an average of 71,500 transactions daily, with about 42,900 active addresses. Now, compare that to Ethereum, which sees a tidal wave of activity, and you can kind of see why some people question 𝗕𝗓's value in a government-managed asset pool. Now, there's also the matter of fees and rewards. Right, in one quarter, Cardano generated a mere $1.8 million in transaction fees, dwarfed by Ethereum's staggering $552 million for the same time period. But I would caveat that to say that, let's face it, Ethereum is all about extracting money from the everyday people, and it's definitely the most expensive shitcoin out there. Just my take. You can let me know yours in the comments down below. And when it comes to staking, well, Cardano's annualized real yield after adjusting for inflation is around 0.7%, whereas Ethereum offers, a little bit more of an attractive one, about 2.73. Of course, I'm not pro Ethereum, just numbers, they are what they are. Now, these numbers, they naturally kind of make investors feel and kind of take a look at, the whole entire picture and say to themselves, is 𝗕𝗓 really the star that we thought it would be? Well, Let's go ahead and break it down just a little bit further then. Right, Cardano's native coin 𝗓𝗓, it isn't just used for transactions, right? It's actually the lifeblood of the whole ecosystem. It pays for network fees, powers kind of staking rewards, and even gives holders a voice in governance. Right, the total supply is capped at 45 billion 𝗓𝗓, with about 35.95 billion already in circulating supply. Now, at first glance, a capped supply like this seems like a solid foundation to support the coin's kind of value. But the devil here is in the details. While a limited supply can boost value, the actual usage and demand for 𝗓𝗓 are just as critical. Now, imagine you're in a kind of town where there's a fixed number of tokens for a popular concert. Even if those tickets are scarce, if no one actually wants to kind of attend the show, their value kind of plummets. That's a little bit like 𝗓𝗓 right now, right? The token has a fixed supply, but its everyday use, its real world kind of concert attendance, it hasn't kind of kept pace with other cryptocurrencies. Now, some critics argue that the limited transaction activity combined with lower staking rewards might not be enough to justify its inclusion in something as important as the US digital asset stockpile. Now, that's all really negative, right? But it's not all doom and gloom for Cardano. There's a twist that could potentially change the game here. Now, Cardano's design is rooted in its research-driven approach, right? Which kind of means it's built to kind of adapt and improve over time. Now, one key moment was the 𝗕𝗪𝗏 hard fork, on January 29th, right? A significant event that marked the move towards full decentralized governance. Now, with this upgrade, 𝗓𝗓 holders now have the real kind of voting power over everything from parameter changes to decisions on treasury withdrawals and even potential future kind of upgrades. It was a pivotal moment, a kind of turning point that promised to bring Cardano closer to its goal of being kind of fully democratic and self-sustaining. Still, there are some challenges that remain. Despite these kind of promising features, Cardano struggles to match the daily hustle of other blockchains, right? Its DeFi ecosystem is still kind of under development, right? It is a little bit on the smaller side at the moment. I do believe, though, in the coming months and years, that's going to change dramatically. Right, at the moment, it's only capturing a tiny fraction of the total market. And when you look at the numbers of developers kind of working on the project, that's 449, it's kind of placing it 12th among blockchains. It's clear that while there is still a decent team behind Cardano, they're not yet at the same kind of league as those kind of other platforms like Ethereum or, dare I say it, Solana. Now, I want to throw out a couple of other curveballs at this stage. This video seems overly negative towards Cardano, but it isn't really my true representation. I'm incredibly bullish on Cardano and 𝗓𝗓. It's just that it's kind of trying to compare something that's been rushed to market. Take Solana, right? It's great to have all of these kind of meme coins and shit coins being created on it, boosting Solana's price as the gas token. But it's important to understand that actually they're just rushing everything through to try to capture as much of that liquidity from the everyday users as possible. It's the same with Ethereum, right? They rush things through and it actually costs people a lot more in the longer term. That's why I take a look at Cardano. Yeah, sure, it might not have all of these metrics where they need to be right now in comparison to other competitors who can't maybe keep their blockchains online. Take Solana as an example of that. Or just looking to try to capture as much liquidity by charging retail investors ridiculous fees to actually process transactions. Take that as Ethereum, right? Cardano is built differently. It's important to understand that all blockchains are built slightly different. Whereas Solana is all about trying to, I want to say extract liquidity because that's what it feels like to me. They're not really planning for the future. They don't really have a good understanding of privacy and where the privacy-centric models are going to be in the future. I think Solana is going to be a kind of flash in the pan, if you will. Ethereum, I think, is going to lose market share over time. It hasn't been built for retail users in mass, right? It's really designed for developers and for people to extract liquidity from everyday retail investors. I don't like Ethereum. I think it is the most expensive shitcoin out there, and I do believe that it's going to basically be the Yahoos, the BlackBerries, the Nokias, the blockbusters of the crypto world in the longer term. So in contrast, Cardano is vastly different, built differently, and has the ability to last the test of time. But let's talk about the numbers again. But because, they are hard to ignore, right? Daily dApp transactions on Cardano, they have taken a little bit of a nosedive, right? Dropping by 73% compared to the previous quarter. Now, when you kind of see a decline like that, it kind of raises the idea that maybe things aren't looking overly positive. But it is in line with the rest of the crypto market. So although this article that we're talking about today has kind of taken a really kind of negative approach to Cardano, actually there isn't anything terribly unusual considering the market's sentiment and participation across the board. Retail investors, they aren't here yet, right? At the moment, only large institutional funds are really kind of backing a few players. So yeah, sure, we've seen a little bit of a nosedive. And when you do see it, it kind of creates a little bit of a concern amongst retail investors. It's as if kind of a once bustling marketplace has kind of suddenly taken a bit of a nosedive and become a bit of a deserted area, right? Kind of leaving onlookers to wonder what happened here. Now, for Cardano to kind of justify its place in the government reserve, it needs to show that it has some potential, right? But to actually also kind of be vibrantly used and to show growing adoption, which if you take a look at the TVL, you take a look at the number of wallets and things like that that actually are participating, it's actually higher than it looks from this article. When it comes to kind of the counterpoint here that kind of keeps hope alive, some experts argue that Cardano's focus on decentralization and its capped supply could eventually tip the scales in its favor. You got to think of it like a slow cooking a stew, right? It might take time for all the flavors to kind of meld together, but when it's done right, it can be incredibly satisfying, right? There are projects like those from kind of 𝗕𝗘𝗪𝗔𝗥𝗘 lab, that are kind of exploring ways to connect Cardano with Bitcoin using its kind of 𝗕𝗢𝗠𝗠𝗘𝗡 system. Now, this could open up new avenues for decentralized finance on Bitcoin, driving fresh activity to the Cardano network. Then there's also kind of the philosophical kind of angle here to consider, right? Cardano's long-term vision is not just about short-term gains or flashy numbers. It's actually about creating an ecosystem where power isn't concentrated in the hands of just a few. Take a look at how Ethereum runs, right? And how they're interconnected with Circle, for example. And of course, how Ethereum managed to get a pass from the SEC all those years ago, right? There's a lot of centralization in the Ethereum side of things. No matter how many nodes there are, the Ethereum Foundation holds a lot of sway. It's all about who you know and who you're rubbing shoulders with, right? Now, it's important to consider that, where the power is concentrated in the hands of a few, but it is actually spread among its users with Cardano, right? In a world where trust is centralized, at least trust in centralized institutions is kind of waning, the idea of a blockchain that puts control back in the hands of everyday people, it carries a lot of weight. And this vision, while still in its early stages, could eventually lead to a more widespread adoption and increased value for ADA. So as we kind of dig deeper into this topic, right, it becomes clear that the debate over ADA's value is a classic case of potential versus performance, right? And this is the same argument that you saw with Amazon in the very early days. A lot of people told you that it was going to fail. Who wants to buy a book online? You want to go to a bookstore, right? They couldn't see the performance versus the potential. And the same could be said for Tesla back in the early days as well. Electric cars, they were never going to catch on. Who wants electric cars? It's all about petrol, diesel, right? Where are we today? Vastly different, although some of the most recent things going on with Tesla, but we won't go into that. My point here is quite simple, right? The people are looking at ADA's value through the lens of current performance over the last 3 months, which is wrong in my opinion, versus the potential. They're not looking at the potential. They're not looking at where ADA could potentially be going. Now, Cardano, it has all of the ingredients for success. It has a strong technical foundation, a clear commitment to decentralization, and a vision that goes beyond just quick profits. But in practice, the numbers at the moment, sure, they're not matching up to all the hype. Right? Daily transactions are low. Developer activity is still okay. Staking rewards, well, they might not be the best. Now, all of these factors, they paint to a picture of a project that's still trying to find its footing in a crowded and competitive marketplace. But let's not forget the bigger picture here, right? The decision to include ADA in the US digital asset stockpile, it wasn't made in isolation. It comes at a time when governments around the world are grappling with how to regulate and manage the booming world of digital currencies. For the US Treasury, having a diverse portfolio that includes not only just the big names like Ethereum and Bitcoin, but also a project like Cardano could be seen as a way to hedge their bets. It's also important to remember, right, that everyone has an opinion, right? They're kind of like, well, you know. And of course, right, who do you believe in more, right? There are Tom, Dick, and Harry on X.com sharing their thoughts and opinions about Cardano, or influencers who were once flipping burgers in the burger joints, right? All around the world, kind of sharing their thoughts about how, Cardano's ADA isn't quite, as good as it used to be, kind of poking fun at it, right? Or it hasn't kind of, it's got all the hype but no real potential to it. Whatever they're saying, right? Ghost chain, all that bullshit. Now, they're saying these things because they don't have the vision for long term. Now, do you believe these people that you do not know, these people who maybe don't have financial or analytical backgrounds in any way, shape, or form, telling you things about Cardano? Or do you believe in the US Treasury with a vast number of professional analysts at their disposal, including Cardano in their US, digital asset stockpile? For me, I know where I'm going to be hedging my bets, and it's not going to be relying on ex-burger flippers to give me their financial advice. Now, it's like having a kind of varied investment portfolio when you have all of these different assets, right? That isn't just kind of pinned on one success story of Bitcoin, for example. Now, even if Cardano isn't performing at its peak at this particular moment in time, its inclusion in the reserve, it signals a belief in its potential, and the analysis that would have been done for the inclusion of ADA in the actual stockpile kind of shows you everything you need to know about where the future lies. Of course, not everyone in the crypto community agrees. Many loyal ADA supporters have backed the token for years, citing its unique approach and strong fundamentals, right? And I get it. I truly do, right? But there are, of course, those other people, those kind of, I'm not going to name names, but those other kind of people out there kind of, trying to tell you that go and put your money into X, Y, and Z because they're already invested in it and they want you to put your money into that, right? They're just kind of pumping their own bags, in my opinion. Now, they kind of say that Cardano's lower activity levels and modest staking rewards, they aren't really good enough for long-term value, especially compared to the booming activity seen on other blockchains, right? And I kind of disagree because if that is your approach, only looking at the here and the now, then nothing new, in fact, up and coming would ever get the light of day if everything is only focused on the here and the now. Fundamental analysis doesn't look at what the price is doing. It looks at, where the future is going, globally, what's required in that future prospect, and what is actually going to be building out towards that future. And Cardano, it ticks a lot of those boxes. Right? It's a classic case here of basically your optimism in kind of fundamental analysis versus the kind of skeptical kind of FUD generating influences, if you will, kind of telling you that you should put your money into something that can't keep its lights on. Solana, for example, which it's mind blowing why you would put your money into Solana at this stage. Anyway, this is where the narrative gets even more interesting, right? Imagine kind of a budding artist who has all of the talent in the world, but hasn't yet found its big break, right? Cardano is like that artist, right? He has undeniable potential, backed by years of research and a vision that sets it apart from many of its peers. But potential alone, it doesn't win awards, right? It doesn't get you the attention from those kind of massive 300, 400% uptick price actions, right? It takes constant performance, right? Consistent performance, market acceptance, and, well, you can argue a bit of luck, but I don't believe in luck. I believe you make that for yourself. Now, the big question remains, can Cardano transform from an underdog with promise into a mainstream player that drives real value for investors? I argue that it already is doing this, right? And there are people out there that will argue, and they can argue with me until they're blue in the face. I really couldn't care. They are, in my opinion, Cardano is already delivering, right? There are top 20, top 30 projects that do not warrant to be top 20 or top 30 projects, right? We can talk about this until I'm blue in the face. There are projects that simply shouldn't be in that kind of top tier. Cardano is holding strong because it is valued. It has a future value proposition that people are willing to buy into. And as the old saying goes, something is only worth what someone else is willing to pay for it. And the fact of the matter is that Cardano has a kind of demand coming in that is keeping its value where it is today. And I do believe that value is going to increase over time because people will be willing to pay more for Cardano in the longer run. Now, a few moments in Cardano's journey are worth highlighting. Right, the research-driven approach that kind of laid its foundation is unique in the crypto world, right? Instead of kind of rushing to market, trying to get all that liquidity extracted so that a few founders can run off with $1 billion, that is not Cardano, right? The developers behind Cardano, they took their time focusing on creating a system that was significantly sound, right? This methodical approach is like building a house on rock instead of on sand, right? I'll say that example, Solana's built on sand, right? They can barely keep their goddamn lights on. Now, it might take longer, but it promises a sturdier structure in the long run. And while some might say that Cardano's slow start is a liability, while others see it as a strength, and one that could ultimately pay off as the kind of ecosystem matures. Now, another turning point was Cardano's push towards full decentralized governance, right? The move to on-chain governance is a game changer, right? It means that every ADA holder, no matter how small, has a voice in how the network evolves, right? This democratization of decision-making is not only innovative, but it also is kind of essential to is in a world where kind of trust in centralized authorities is, well, fading, right? However, this ambitious plan, it comes with its own set of challenges, right? We have to acknowledge it. Ensuring that every vote counts and that the process isn't kind of hijacked by a few influential players is a complex balancing act. This is why I believe that if you're an influencer, you should only have one Cardano stake pool. You shouldn't have 10. To me, that seems greedy. It seems like you're just extracting from the network and the ecosystem. And to be honest with you, it doesn't make sense for the kind of decentralization, giving that much centralized power and voting power if you delegate your vote to them, to just a single actor, right? To me, if you're an influencer, in fact, I think everybody should have a maximum of one stake pool, right? They shouldn't have multiple. And of course, if you want to stake to us, well, you can find the link in the description down below. Our ticker is 𝗕𝗘𝗪. Now, it's kind of a high wire performance right here. One where you kind of one misstep, it could completely derail everything, right? Now, there's also the technical side of things here, right? Cardano's use of the extended UTXO model, it sets it apart from other blockchains like Ethereum, right? Which uses an account-based model, right? Without getting too technical, this means that Cardano has a different way of tracking transactions that could offer improved security and scalability. Yet, this innovative approach hasn't translated into the kind of explosive growth in daily transactions and active addresses that many may have expected. It's a reminder that in the fast-paced world of crypto, being different doesn't always mean being better, right? It's not, at least kind of not immediately, right? But it is important to understand that a lot of the kind of addresses, and I've gone through this a few different times. You can join us in our free Discord server if you want to know a little bit more about it. But, when you take a look at the number of addresses, total addresses, right, it kind of throws people out, right? You take a look at Bitcoin, I think that's like 53, 54 million, addresses. There's actually only, I think it's like 20 or 30% of those that actually have a Bitcoin in them at all. And then by the time you actually start scaling it to significant amounts of Bitcoin, it becomes significantly less. I think ultimately we are, talking 10% of all addresses on Bitcoin actually have meaningful amounts of BTC in them, right? So it's all great to talk about all these kind of wallets and great wallet counts here and great wallet counts there. But ultimately, a lot of it's fake, right? It's important to understand that there's metrics to getting listed on centralized exchanges that require wallets, right? So a lot of it's actually just fake. Same with staking, right? If you kind of take a look at these things and you actually take a proper approach to it and do your analysis, well, you'll come to discover that actually there's a lot of things happening in this space that are unethical. Now, as we come to the climax of our kind of exploration here, it's kind of important to weigh all of these factors together, right? Cardano's inclusion in the US digital asset stockpile, it might seem like a bold move, especially given maybe its current performance metrics. But sometimes decisions like these, they aren't just about where a project stands today. they're about where it could be tomorrow, right? And governments and institutional investors are known for taking calculated risks. And perhaps they see something in Cardano's unique structure and the long-term vision that maybe these old burger flippers simply are overlooking. So, what's the key takeaway of my little rant today? Well, on one hand, Cardano's 𝗓𝗓 is kind of backed by solid research, decentralized governance, and capped supply that suggests long-term value. On the other hand, its current activity metrics, like lower daily transactions during this bearish turn that we've seen over the last 3 months, minimal staking rewards, and a shrinking dApp ecosystem. I argue it's not shrinking, it's actually expanding. But again, the articles are spinning a narrative here. Now, these kind of concerns, they are valid, but it's kind of just about the immediate now and here, right? It's not about where the future is going. It's kind of like watching a seed that kind of promises to become a mighty oak tree, right? But if you're not willing to kind of wait for all of that kind of those first sprouts to kind of break through the soil, well, that's on you as an investor. You might be looking for quick gains, in which case, go down the casino, right? The future of 𝗓𝗓 and whether it can truly kind of earn its place in the government-managed portfolio depends on a few key factors. First, will Cardano be able to ramp up its network activity? I believe it will, right? More daily transactions, more active users, and a thriving developer community are critical for its success. And I do think as the market sentiment picks up, we're going to see all of those metrics also pick up. Second, can it kind of enhance its staking rewards and overall financial incentives, to kind of compete with other blockchain networks? Now, the staking side of things, to me, it actually makes sense. You're beating inflation, right? Which is the ultimate goal here, right? Whilst investing in an asset that is ultimately appreciating in value, right? Let's take a look at where Cardano was in 2023. Its low was 22 cents. As of the point of recording today's video, it is 70 cents. So not only did you beat inflation if you were staking from 2022 through to 2025, you've beat inflation, but you've also got an appreciating asset. Now, would I rather invest in Cardano than Ethereum, the world's most expensive shitcoin, and stake my 𝗓𝗓 rather than staking my ETH? Absolutely, right? I don't believe in contributing to a network like Ethereum when they do not change the very pain point that many investors have, which is the gas fees. They don't have to keep the gas fee model the way that it is. They voted on it and they voted to keep it that way, right? They voted to keep extracting money. I do not like that. I disagree with it fundamentally. So why would I? I'm invested in 𝗓𝗓 because I believe in the future and I believe in the ethical approach that they are taking. Now, of course, I could be off a little bit, but that is my take on it. And of course, right, it's important that a kind of fully decentralized governance, it translates into a kind of a tangible benefits that drives, broader adoption overall. Now, these are just kind of glimmers of hope, I guess, to some, but, some projects are already kind of testing Cardano's innovative features and partnerships with other blockchains, like efforts with at least kind of integrate Bitcoin's ecosystem and, of course, XRP as well, right? They could spark a new wave of interest here, right? If Cardano manages to bridge the gap between its kind of lofty ambitions and the kind of real-world performance that you see over the last 3 months, well, we might see a dramatic shift in how it is valued, not just by enthusiasts, but by institutional players and even governments. After all, and as I said earlier, right, the governments with their abundance of resources and, analysts at their disposal have decided to include 𝗓𝗓. They wouldn't do this just because of its market cap. They do this because of what they see from a fundamental analysis standpoint. Now, the jury, it is still out there, right? Cardano's 𝗓𝗓, it has been in the spotlight, it has actually been given, a spot in the US digital asset stockpile, right? A decision that has sparked debates and divided opinions, right? Is it a case of misplaced optimism, or is it a calculated move that actually bets on Cardano's potential to become a key player in the digital economy, right? I believe it is. Only time will tell, though. Now, as we kind of wrap up this deep dive and a little bit of a rant that I've had today, think about it like this. In the world of crypto, every token has its own story, its own set of challenges, and its own moments of triumph, right? Cardano's journey is no different. It's a story of ambition, innovation, and a sometimes harsh realities of the market that rewards both vision and, of course, execution. While some may focus on the kind of short term, here and the now with the low transaction numbers in this bearish move that we've seen, the modest rewards, and others kind of are betting on the brighter future, a future where decentralized governance, improved technical performance, and an increase in adoption could actually turn Cardano into one of the crown jewels in the crypto world. So to sum it all up, Cardano's inclusion in the US digital asset stockpile is more than just a headline. It's a sign of shifting tides in how digital assets are perceived and managed at the highest levels. Right? It challenges us to look beyond the immediate numbers and to consider the potential that lies in a well-structured, research-backed ecosystem. Whether ADA will ultimately generate the value that its proponents believe that it can is still maybe an open question. But one thing is clear, the debate is far from over, and the journey is just beginning. If you found this information useful, informative in any way, make sure to smash that like button, guys. The more likes that we get on this video, the further it will be pushed on YouTube, and it will spread the word about Cardano. So if you love Cardano and ADA, make sure to smash that like button. If you want to know a little bit more about what is going on in the world of Cardano from the news and the technical analysis, make sure to smash that subscribe button just down below. Talking of technical analysis, you can check out my latest ADA right here.